All right, everyone. It's Monday the 19th. I'm bringing this video to give people an idea of what's going on with the US dollar and precious metals, information that the mainstream media is not bringing. Again, and these are experts that are using different avenues like YouTube and everything to try to bring the information that the mainstream media is not bringing. Okay, if everyone remembered what happened in 2007 and 8, where one morning you got up and everything crashed, people lost a lot of money in the banks. Well, something is coming that can be worse than that. But again, because the mainstream media is not reporting on it, a lot of people don't are not paying attention. So I'm making this video. This is just one of several different people I listen to. Now, they all don't align, they all don't speak the same, they have different perspectives, but the general principle they align with. So let's get into the video, take a listen, and then I'll give my comments after. So there we go.
One thing I learned from Jim Rickard is dynastic wealth, and that is wealth that has lasted in families at least 300 years, and it has three legs. Makes it pretty simple. Real estate, although that's overvalued right now. Truly rare collectibles. Look at the Queen of England, and gold as the foundation. Now, you can do all three with gold because you can have a gold mine, you can have gold coins, and you can have, gold rare antiques or rare pieces. But, there's nothing else that has lasted 300 years but those things. And you need to be able to, if you have gold, not only can you accumulate them when they're cheap, but you can maintain whatever you have.
In this enlightening video, we delve into the complex relationship between public perception, economic data, and the resulting cognitive dissonance many experience in today's tumultuous financial climate. As we navigate through the aftermath of 2008's financial crisis, we explore the diminishing returns of monetary printing and the crucial erosion of confidence at various levels, ultimately affecting public trust and economic stability.
The truth always lies in the data, not in what they say. And that takes you back to the cognitive dissonance, because what happens is when people hear all of these conflicting things, the mind can't really deal with that. So they choose something for normalization that they can live with. And who really wants to know the awful things that are happening? I'll tell you a little story. I have this friend, and we were up at the bug out house, and that doesn't make sense to me. If there's something that's going on, I go to the doctor every 3 months. I get my blood tests. We just had a meeting yesterday, and she's like, okay, this is great. This is great. Adjust this, adjust that. My best interest first. What we've witnessed since 2008 is that it takes more and more and more of that printing, and they get less and less result, because it's all about the confidence. And we've witnessed since 2008, the bank-to-bank confidence was gone, as witnessed by the interbank lending. The central bank to central bank confidence was gone, as we witnessed in 2015 with the Swiss surprise. And we can go into those specifically, but we've just been, and then what, it was a year ago, last June, when the central bank to the Wall Street crowd, they lost confidence. There's only one level of confidence left. So it's not like you have all of these to go through. We are at the end, and that's the public confidence. And that's why what you brought up in the beginning is so critical, because if you aren't feeling it yourself, if you have enough income that inflation doesn't really impact whether or not you can put food on the table or gas in the car or buy the things that you want, you think everything is fine. But at that lower level where all of that matters, well, there's a lot of unrest that's happening, and we're also witnessing a lot of creep. In other words, those that are getting hopeless and hungry, yes, creeping into neighborhoods, yes, that are not. Monetary velocity is the number of times that money changes hands. So let's just say I have a good week and I decide, okay, maybe I can afford that car that I was wanting to buy, but was postponing. So now, okay, I had a good week. I'm going to the car dealership. I buy a car. Right. That money is transferring to, say, the person that sold me that car, and that person goes, gee, I had a pretty good week. Maybe I'll take my spouse on that weekend that we were talking about. So now the money changes from my hands to his hands. They go on vacation and it's transferring again, and hey, they go to a restaurant, he's feeling flush, they leave a bigger tip, and the wait person goes, well, now I can buy Jimmy the sneakers that I was wanting to buy him. So it's the speed at which money changes hands, and it is an indication of a truly robust economy for a while, up until 1997, right, was the last time that debt was actually stimulative in the economy. But ever since 1997, it has been dropping to levels below where it was back in 1933 during the Great Depression. Lately, it has been spiking because there have been a couple of blip ups, but they were not pervasive. They were small blips. Now it is going up in a pervasive way, which is more of an indication that people realize that the currency is losing value. That's that rapid inflation, right? So they're rushing to spend it while it still has some value before the prices of those goods and services go up. And that's why that major pattern shift in the velocity of money indicates, for me, the beginning of the hyperinflation. And we are hearing this around the globe, and even in this country, how sticky inflation is, how it's started to move up a little bit. They're playing it down, and I think that all of this good news is about hiding what's really happening. It's just a distraction. That would be true for every single fiat currency. I mean, that was true for all these, right? And then some. So what happens when it gets to zero? Well, we saw the monetary velocity chart on just the M2, because of course they took the M3, the full money, away from us in 2006. But I'm seeing a spike in the monetary velocity in a very, very, very pervasive way. This is what I was looking for to indicate the start of the hyperinflation. Well, I've been studying currency since 1987, and I'm so grateful that I did. You and I both worked on Wall Street for a while. Because what you do is you see, there's well over 4,800 currencies that don't exist anymore. And they all have the same kind of pattern, which means that if you understand where we are in this cycle, you can understand what the next most likely thing is to happen. And therefore you can get into position with your investments, with your food, with that whole mantra piece before you really need it. Because I'd always rather I don't care if I'm 10 years too early. I just don't want to be 1 second too late. So the strategy is about what is most likely to help you sustain a standard of living, preserve the wealth that you have to or choose to keep inside of the fiat money markets. Right. Get into a position to have that wealth transfer your way as this whole market shifts, so that on the other side of this mess, number one, you've been able to maintain your freedoms and your liberties for yourself and your family and those people that you love, and sustain a reasonable standard.
Okay, everyone, I'm going to pause the video right there. And when I fast forward a few minutes ago, it was because she was just using an analogy. So that was really important. Then she spoke about cognitive dissonance, where it's like, for an example, I might go out the road and mention this information to people, and it's conflicting information, but what I'm saying or what these videos are saying is so scary, they don't want to hear it. And they know something is wrong, but they rather stay in a comfort zone, so they don't want to hear this information. Some will even say that, oh, this could never happen to America, this could never happen to the United States. They just think it's up here is just so invincible, that nothing can ever happen. And then I go back and say, well, look what happened in 2007 and 8, where one day you woke up and everything just crashed. People lost money in bank accounts. You had to find out if the money was insured or could get insured, how much you can get back. These things happen. So anyway, what happened is the United States dollar is no longer with the United States is no longer with OPEC. It's no longer, the dollar is no longer backed by oil. And now the BRICS nations are making a move. I would call it a soft war, where they're making a move, and it's a big hit on the US dollar. Reason why? These countries, you're talking about Russia, India, China, South Africa, Argentina, Brazil, and the list goes on and on, part of the BRICS nations, and more are coming to join. And what happened is they are trading in their own currencies now. So the United States dollar, the US dollar, is no longer the world's reserve currency. As these nations are now trading in their own, the US dollar is no longer backed by oil. We're no longer with OPEC. So something is coming down where these countries know what's happening, but our mainstream media is not reporting on it. So something very serious is going to happen. And these experts that are not allowed to go on television and speak about it, they're doing their best to make these videos. So that's why I'm bringing these videos. And you can look at it and think think on it for yourself. What I would say it is this: precious metals is the way to go. Because throughout history, these are storable values like gold. Reason why gold is a storable value, it goes up, but it never has a drastic decline. There are lower lows, but it's small. If it's $2,000, it might drop by $50, $100, but not a drastic drop. So it's not volatile. There's no volatility. That's why they call it a storable value. Silver, to me, which is legal tender, but it's also a storable value. It's just that silver, because of its lower price and its use, they try to manipulate it to keep the price down, where corruption plays in. So then you could think about silver being more volatile, and it's only due to corruption, because now silver it has its industrial use and it has its monetary use. Where industrial wise, we use silver for everything when it comes to military applications, missiles, ships, every single thing. We use it in the regular world, cars, computers. Its use is everywhere, 1,000%. And supply and demand plays a big time in silver. That's why silver prices are so low. It's because they manipulate it, and it's a lot of corruption behind it. That's why they hold it back. Now, going throughout history, right now silver stands at a ratio with gold between $80 to $87 to 1. Because again, price manipulation, and with the fluctuating price, I think silver is around like $23 and change now. Gold is about 2,000 and change. So what happened is, going back in history, they know silver coming out the ground is 7 to 1 compared to gold. That's coming out the ground from mining. Then going out throughout history for the last 50 to 100 years, silver, the ratio has fluctuated, where it can go from 10 to 1, 15 to 1, 20 to 1. Now it sits at 80 something, 87 to 1, 85 to 1, based on the days and the price movement. But they know, when you do the statistics and you take all the movement throughout history and you take the average, they're averaging between 10 and 20 to 1. Now, this is going to come because what happens is, when gold moves, silver moves. And as I say, history doesn't repeat itself exactly, but it has a rhyme. So it happens, it's repetitive, but not to the specific, but the range. So it's statistics that's playing out. And that's why when gold move, silver actually has a better movement than gold, which brings down the ratio. So what the experts are saying is, take your gold, buy the silver, because it's at 85, 86, 87 now. When it moves and the silver outperforms the gold, now the gold number The number of the value always stays higher, but don't think the silver, because it's two different numbers on value, that the silver is not outperforming. The outperformance is when the ratio shrinks. So the ratio from the experts will shrink to between 10 and 20, so you can go at 15 to 1. So what they're suggesting is advising is sell. Now you don't have to sell all your gold. You can take your portfolio. It's like playing a favorite. Take some of it, put it on the silver, keep some of it. And when the silver now moves and the price action starts, where the gold starts skyrocketing, the silver starts skyrocketing, but the silver outperforms the gold, the ratio goes to 10 to between 10 and 20, then now you take back your silver and you buy the gold, right? That's if you want to make a profit on the market. So when now again the gold is a more storable value, silver is more manipulated because the price is so low and the supply and demand for silver is so extremely extravagant because again its application in everything in the world. And once say it's for military application, once a missile blows up, there's no recycling of the silver anymore. So demand and supply is so great for silver. That's why they're anticipating such a big move for silver. So it's a very good precious metal to get into. And the reason why I'm saying all these things is this: whatever is coming is coming. They're going to crash the US dollar. They're printing money like crazy, right? They spike the interest rates, which deals with bonds and everything at that time. And silver, precious metals is where you could protect your savings, your retirement, and everything. The news is not telling you about this, but what I could tell you is this: based on these experts, China, Russia, India, Africa, Brazil, they're all buying up millions and millions in gold and silver. Millions in gold and silver. So whatever is coming hard and coming quick, and our mainstream media is not telling us about it. So I hope people could look at this video and start paying attention a little bit to what's going on and open their eyes and see, well, something is happening and the mainstream media is not reporting on it. So again, as I said, silver is volatile only because of price manipulation and corruption, because they know the use. And if the monetary value and the industrial value is supposed to get really exposed to the market, silver will go up greatly. Can't even say a price on it. But again, the movement is going to start pretty soon. And the experts are saying, take your gold, buy the silver. When the ratio shrinks because the silver is going to outperform the gold, then you come back now, sell the silver, buy the gold, because gold is much more of a storable value, less corruption behind it. Now, silver is legal tender, but because of corruption, to maintain the fiat currency, you can't even go in a bank and exchange your silver for money. But right now, Florida and many other states are trying to pass the law that now we could go back where it's real legal tender, as it is, as it should be, to where you could walk into your bank and exchange your silver or gold for money. And I'm not talking about, there's a spot price and a premium price. So you'll be exchanging for spot price no matter what the movement is. So again, please pay attention. This is just one of them out of many people I pay attention to. And the reason why I listen to many different people is to hear conflicting information, to try to sift through again discernment, and to sift through the information to be more reasonable with information. But they're all aligning. Different, slightly different in perspective, but they're aligning generally. They're aligning generally. So people need to start paying attention to protect their wealth, their savings and their retirement. So I hope you guys listen to this video. I'm going to bring much more. So please go to YouTube, hit the link, go to YouTube, NYRON'S Forum, NYRON apostrophe S Forum. Hit the like, the thumbs up, hit the subscribe, and hit the bell, please, and share the videos. And please support the video. All right. Hope this information helped, and I hope you guys really start paying attention to this. All right, thanks.